What is up, boys and girls? Welcome to TV Tutorials. Doc over here, and I am back. Yes, I am back with another video for you guys. As you can see, today's video is a little bit different. I have a previous question paper that I will be answering today. It's for Entrepreneurship and Business Management N5, which is paper 2, right? So let's go right ahead and look at the first question that I want to cover today, which is question 2, right? And question 2 starts with a scenario, right? So our scenario says Tom Black has just been employed as a manager at PTY company. You are requested to design a salary package for Tom Black. Take note that he will be working on weekends, during holidays, and overtime. Consider also alternative benefits applicable to this position, right? So this is our scenario. We are basically somewhat a recruiting manager or HR officer, and we are tasked with drafting a salary package, right? So one of the things that you would typically do when you're drafting a salary package is sort of like explain how each and every amount that is going to be paid to the employee will be calculated. For an example, you will be expected to calculate the net salary, you will be expected to calculate the gross, you will be expected to calculate benefits, all those stuff, right? So let's have a look at the information that we are given, because obviously you will be given this information to work with, right? So it says here, calculate the net salary payable to Tom Black for the month of August 2018 using the following information below, right? So we know that Tom Black is earning an annual salary of 420,000, right? So this simply means that for 1 year, for a period of 1 year, meaning 12 months, Tom Black will be earning 420,000 rand in 1 year, right? And then we are also told that weekend and overtime rate is at 620 rand per hour, right? And then during the month, he worked for 35 hours overtime, right? This is very important information. It's information that we are going to use to initially reach our net salary, because our objective is to calculate the net salary, right? So we are also told that Tom Black is entitled to benefits, right? And what are those benefits? We have car allowance, we have medical aid, house allowance, pension fund, meal allowance, 3% commission on total monthly sales. Total monthly sales is 780,000 rand, and we have a tax payable for the month, which is 28% of the gross salary, right? And this is all for 10 months, right? So there's a number of calculations that will be basically happening here, right? We first need to understand what is a net salary, right? So basically, a net salary is what an employee takes home. This is the amount that an employee receives after deductions, right? So the company will pay a specific amount to an employee, and on that amount there will be deductions, right? Now that amount that the company pays, in this instance PTY, when PTY pays Tom Black, they will pay him a specific amount. That amount is called a gross income, right? Now that is before any deductions are made, correct? And then once we have subtracted all the deductions, we are left with a net salary, right? So in order for us to get the net salary, we need to determine the gross income, right? So here's the first thing that we need to do. I'm just going to split my screen into two and then open this little document here. Now this is gonna be my answer sheet for this video, right? It is very important to go through your instructions, because your instructions will tell you exactly how to answer your questions, where to answer your questions. Now they might not necessarily give you a spreadsheet to answer your question. I just chose a spreadsheet because it's more convenient for me, simply for the calculations, right? However, I will be explaining everything that you need to know, right? So let's go ahead and look at the first thing that we need to determine, right? So remember, we are looking for the net salary, right? The first thing that we need to do is determine how much does Mr. Tom Black earn every month, right? And we do that by using this amount that is given to us here, which is from the annual salary, right? We understand that from the annual salary, we are able to determine how much does Mr. Tom Black earn every month, because the annual salary, as I explained, it is an amount that Tom Black will receive in a period of 1 year, meaning for each and every month he will be paid a specific amount, and all those amounts will sum up to the 420,000 rand, right? So how do we exactly determine how much does Tom Black earn every month? We simply need to take this amount and divide it by 12. Simple as that, right? So I'm going to come to my answer sheet. Now, it is best advised that you show all your steps when you do your calculations, right? And these are the steps. Now, on my answer sheet, unfortunately, I won't have the steps showing, simply because I'm using Excel, right? So I'm going to be getting answers instead of having the formulas or the steps, understand? However, like I said, I am going to explain them. So the first thing that you would need to do in this instance, remember we are trying to get a net salary and we're given this information. First, we need to determine how much Mr. Tom Black earns per month, right? Now, to determine how much he earns per month, as I said, we need to take this amount and divide it by 12. So we are basically going to say 42000 divided by 12, right? And since I'm using Excel, I will need to use the equal sign, but this is how your step will look like. You need to have something like this: 420,000 rand divided by 12, right? And then you will get your answer, which is 35,000 rand, which means every month, Mr. Tom Black is earning 35,000 rand basic salary, right? Now that we have that out of the way, we need to calculate the overtime, right? Because we are being told on the statement that during the month he worked for 35 hours as overtime. And we know that his rate for overtime is 620 rand per hour, right? So what does this mean exactly? It simply means that for each hour that Mr. Tom Black works as overtime, he will be paid rather 620, right? So that means out of the 35 hours, we need to multiply them by 620, right? So we're gonna go to our answer sheet over here and then punch in the formula, which is gonna be 35. Actually, let's say 620. Either way, you can start with 35 or the 620. It doesn't matter, right? Just as long as you multiply the two. So you will take the 620, which is Tom Black's rate per hour for overtime, for strictly overtime and weekends, right? And then we are going to multiply it by 35. 35 is the number of hours that Mr. Tom Black worked as overtime that particular month. Remember, we're only looking for a net salary for just 1 month, which is the month of August, right? So these are the hours, the overtime hours that Mr. Tom Black accumulated for that particular month. It's 35 hours, right? And then I'm gonna hit enter, and then you will get a sum of 21,700, right? That is the amount of overtime owed to him, right? Now that we have the overtime, then we need to determine the gross income, right? Now, with the gross income, it is very simple. You just simply add these two amounts over here, right? If you add your, let's go ahead and put the equal sign. We're gonna add the amount that Tom Black earns every month plus the overtime that he worked for that month, right? So I'm gonna go ahead and add a plus sign over here, and then we will get an amount of 56,700, right? That's gonna be Tom Black's overall gross income, right? Meaning when the company pays Mr. Tom Black, they will be paying him a total of this amount when you only look at the monthly salary and also the total overtime that he worked, right? Now that we have that amount, we need to move to the benefits, right? Now, benefits, they can be a little bit confusing, right? This is a point where you need to understand what are benefits and what are deductions, right? Benefits are what the organization pays to the employee or gives to the employee, right? Hence the word benefit. It's what the employee benefits, right? It's what the employee receives. And then deductions is what the company takes away from the employee's overall pay, which is the gross income, right? So we have our deductions listed over here. You have your car allowance, medical aid, house allowance, pension fund, meal allowance, 3% commission on total monthly sales. Now, pay attention to how we have tax payable for the month, which is 28% of the gross salary. However, it is not included over here, right? This is where now what I just said comes in. You have to understand what are benefits and what are deductions, right? If any amount is being taken away from the gross income, it is a deduction, right? If we are taking that amount away from the gross income, it is a deduction. But if we are adding a particular amount to the gross income, it becomes a benefit. You understand? Like car allowance, for an example. Car allowance typically means that every month Mr. Tom Black receives 5,000 rand strictly for car allowance. Medical aid, he receives 3,500. 3,500 rand. You understand? So on and so forth. However, with tax, this is an amount that is actually taken away from the employee's gross income, and then it is being given to the government as contribution. It's tax. You understand? So it does not count as a benefit. It is actually a deduction. Hence, we left it out of our list of benefits over here. Right? So very important. You need to know how to determine if a particular product is a benefit or a deduction. You understand? Now, I want to first cover the 3% commission on total monthly sales, right? What this simply means is that Mr. Tom Black is basically going to get a 3% commission on his monthly sales, right? And we are given his total monthly sales, which is 780,000 rand, right? So we need to determine 3% of this amount, right? And we do that by I need to calculate it here. I am basically going to say 3%. That would be the equivalent of saying 0.03 multiplied by this amount over here. This amount over here, the 780,000 rand, because it is his monthly sales, right? That's his total monthly sales. So we need to multiply it by this amount, right? And then we will get 23,400. This is 3% of this amount, meaning this is the one of the benefits, actually, not the overall benefits, right? Which is right here, right? I'd already calculated it, which is right here, 23,400. And I literally did the same thing. It's 0.03 multiplied by the total monthly sales, right? So now that we have this amount, we need to add all these other amounts plus the 3% commission to get the overall benefits amount, right? And we simply do that by adding them. Simply do that by adding them. So I'm gonna go ahead and add them. There we go. We get a total of 40,150. So Mr. Black's overall benefits would be 40,150, right? Now, we have the benefits, we have the gross income, we have the total overtime pay, and we have the monthly salary. Next up, we need to determine the gross earnings, right? To determine the gross earnings, we need to add the gross income plus the total benefits, right? Remember, the gross income comes from adding the monthly salary with the total overtime, right? And then now to get gross earnings, we need to add the gross income with the total benefits, right? So it will look something like this. We will add the gross income with the benefits. Whoops. With the benefits, right? So it's going to be the 56,700 plus 40,150, and you will get 96,850. That's going to be Tom's total gross earnings, right? So the total gross earnings basically means when the company has to pay Mr. Tom Black for that particular month, the month of August 2018, they are going to spend 96,850, right? Now, this does not necessarily mean that Mr. Tom Black will receive this amount, Remember, there's still deductions. We still have the tax that was left as part of the benefits, right? It also needs to be calculated in this entire amount. So this is a deduction, meaning it has to be removed from this amount. Then we will be left with the net salary, right? But before we can do that, we need to determine the tax. We are being told that the tax payable for the month is 28% of the gross salary, right? So that basically means 28% of this amount is going to be payable tax, right? So we are basically going to say 0.28 multiplied by your gross earnings, right? Multiplied by this amount. Oh, I forgot the equal sign over here. Equal sign multiplied by this, and then you will get this amount, which is 27,118. This is gonna be the deductions from this amount, right? And that basically explains how we get the net salary. You have to deduct the basically overall deductions. Sometimes it won't even be just tax. There can be other points mentioned in the benefits as deductions. You just need to know how to pick them up. You understand? That is the most important key in this part of the calculation. You need to know which is benefits, which are deductions. You understand? So now that we have all these amounts, we can go ahead and calculate our net salary, which is gonna be we're simply gonna take this amount, the gross earnings, and minus all the deductions, and in this case for Mr. Tom it's just the tax, right? And then whatever amount you get here means that is the amount Mr. Tom Black will be taking home. This is the amount that Mr. Tom Black will be having in his bank account, which is 69,732. That is that. And then let's look at the next question. This one says calculate the fringe benefits amount that was added but not paid out to Tom Black. Question 2.1.2, right? Now this one, it is very easy to be confused by this question because they are actually asking you to basically add everything here. However, your answer should be what was not paid out to Mr. Tom Black. Everything that was paid out should not reflect in your answer. What does that mean? It means that we have to go back to all our benefits. Remember, they are only talking about fringe benefits, right? Fringe benefits are basically what I explained earlier on. Anything that the employee receives as a benefit, anything that is given to the employee, it is a fringe benefit. But anything that is taken away from the employee, it is a deduction, right? So I come back again to my statement that I made earlier on about the tax. Tax in this case, it is a deduction. It is not a fringe benefit, right? So do not confuse this and add it into your calculation. Otherwise, your entire calculation will be incorrect, right? So you just want to focus on these other benefits except the tax benefit, or in other instances where you have other types of deductions, then you need to exclude those deductions because they are not fringe benefits, right? So let's go ahead and calculate the fringe benefits here that were not paid out. Keep that in mind, not paid out to Mr. Tom Black. And we are being told here in our information that there's a particular amount that was paid out. Only this amount was paid out. The rest, we are not being told anything about them. So it's safe to assume that they were not paid out, right? So how are you going to go about this calculation? You will basically add all your benefits, and then just subtract the one that has been paid out, which is only the meal allowance, right? So let's go ahead and add all those benefits over here. So on your answer sheet, this is how your answer sheet will look like. You will have question 2.1.2, and then you will maybe list all your fringe benefits, and then when you list all your fringe benefits, exclude anything that is a deduction. Once you include anything that is a deduction, just know that anything that you write from that point forward is incorrect, right? So you will list all your fringe benefits here and then all their amounts, and then you just add all those amounts, right? So let's go ahead and add the amounts. which are all of this. For now, I am going to include everything, right? And then I'm going to come back and say minus, because we understand that there's only one amount that has been paid out, which is the meal allowance, and it is 1,250, right? So out of the overall amount of benefits, we are only excluding this amount because it has been paid out. Anything else has not been paid out, as our question instructs us to. We need to only display amounts that have not been paid out. So we need to have the overall amounts of everything except the 1,250, right? So we're gonna go back to our answer sheet and then hit enter, and then this is gonna be the overall amount of Mr. Tom Black's fringe benefits, which is 38,900.